Well, firstly, thank you all for coming. I genuinely don't think there's a spare seat in the room. So apologies for that. There is space downstairs if you have colleagues arriving slightly late. And we are slightly late, so I won't bore you. My name's Andrew Deverill-Smith. I'd like to thank you ever so much for joining us. If you've been before, you kind of know the form. If you haven't, 1 hour, very snappy, an amazing panel, as little from me as I can get away with, and lots of questions from you, please. So without further ado, if there is a fire alarm, please leave. If your phone rings, we'll all heckle you. And no, I just can't thank you enough for being here. So without further ado, what we'll do is our panel will introduce themselves. So I'm going to go from my far right, Polly.
I'm Polly Ogden-Duffy. I'm the Managing Director of John D. Wood & Company Estate Agents. So essentially I'm an estate agent. I've been working in property for 20 years, perhaps not representative of the full market. My business is one of the oldest estate agents in the country, and we are based in the London prime market, Surrey, southwest London, but owned by a business, Connells Group, which ultimately has property businesses all over the country. So I do have a fairly good understanding of the market across the country. So,
Thank you.
Good morning, everybody. I am Fiona Fletcher-Smith. I'm Chief Executive of L&Q. Now, L&Q is one of the country's largest housing associations, and if you don't know what a housing association is, it is a regulated housing charity. But that hides a multitude. We are a business with £1 billion turnover each year, a balance sheet of about 40 billion. Last year we built 4,000 new homes, and we aim to build between about 2,000 and 3,000 new homes per year. The most important thing to us at the moment, though, are the 108,000 homes we already own and manage and look after, and we provide homes for about 250,000 people across the UK.
So I'm Nigel Allsop. I'm the Head of Research at Greystar in Europe. Greystar's, if you're not familiar with Greystar, we're a vertically integrated operator, developer, and investor in rental housing. We have about 800,000 units worldwide in the US, Asia, Europe, and Latin America. And yeah, that's me.
Hello, my name's Honor. I'm the Chief Executive of Birchgrove, and we are build to rent for old people. We're exclusively into old people. We're the only ones in the country who do it. We have 9 communities open within the M25, and so my reason for accepting your invitation this morning is threefold, because I'd love to hear what Rob's got to say. I am desperate for more competition, so I'm desperate for build-to-rent and student people to pile in, because we have a massive undersupply in later living, and I'm also in the market for buying ready-made towers off house builders. So if there are any house builders who want to sell 75 units within the M25, I'm your girl.
I suspect there might be one or two open to a deal. Thank you so much. I told you it's an amazing panel. We can't wait to hear from you. But for those who've been before, Rob's got a few slides. All good news, I'm sure. And over to you, Rob. Thank you. Thank you so much. So I have a good number of pre-supplied questions, which I'll do my best to get through. But as always, if you've got a question, please raise your hand. We've got roaming mics, and that just makes my job easier. So I'll try and get through as many questions from the floor as well. So does anybody want to raise their hand and ask a question immediately? No one's quite ready. So I'm going to go straight in. This is a cracker, I think. According to Time magazine, about 49% of the people in the world are meant to are holding national elections. How will this impact the global property market, and how will this impact your business, do you think? So,
you're looking at me.
Gazing down the line, but yeah, Polly.
I think certainly for our business in the prime market, we've had a really strong start to this year, but we're expecting the second half of the year, coinciding with the election, to be very, very difficult. So we're trying to do as much business as we can right now, but we're expecting there to be a pause as we see with every time there's an election, there's a feeling of uncertainty. Although it looks likely what is possible, as we know with the Brexit vote, until the day, you never know what's going to happen. But certainly in the prime markets, there will be pause. I hope very much to be proved wrong. I think in terms of interest rates, it would really help us if the interest rates dropped in June, because if they dropped in August, we will probably have already entered that period of summer holidays and the market may not bounce back for us. From a global perspective, I think obviously the US is a hot topic and perhaps more uncertainty over there. And we have a lot of US buyers buying here. But I think that it's business as usual, but we just learn to trade as best we can in these conditions.
Thank you, Polly. Fiona?
Bring it on, I say. As long as 100% of people in this country get to vote, I'll be happy. We've been in a pre-election period for, I don't know, years it feels. And that uncertainty that it's giving everybody, buyers, policymakers, that's incredible. The only slight downside to all of this, though, is governments come and go, but Treasury officials live forever. So I do find myself occasionally saying this. When Liz Truss said, I'm really worried about Treasury orthodoxy in thinking, it really bothers me because in developing housing, and particularly social housing that this country desperately needs, it's regarded as part of the national debt too often, rather than the fact that we're building an asset for this country and helping the 8.5 million people who need to who are inadequately housed at the moment. So bring it on, please.
So I'd say that housing policy, as it relates to things like planning, is probably a quite controversial point of view, but I don't think politicians are super effective. So I don't think it's going to make a ton of difference directly in terms of housing policy. Where they could throw a spanner in the works is things like regulations. So in countries like Ireland, we've seen development grind to a halt in reaction to the 2% cap there. I think that's a kind of downside risk for many housing markets worldwide. There's still talk of housing bill in Spain. There's forever talk of more housing regulation in Germany. The other indirect effects are probably more important. So immigration is a big issue in the UK. I think it's a big issue globally. That has certain knock-on effects, fairly obviously for real estate, but particularly for housing, given that it's demographically driven. But the single most important thing, I think, is just not dropping the ball with economic policy. The worst thing that could happen to us is that a chancellor or somewhere else in some other market makes some fiscally irresponsible move, and we have another kind of quasi-Kwarteng moment. Rates go up, the market grinds to a halt. We're back to where 12 to 18 months ago. So I feel like there's more risks to the downside.
And can I just ask, Nigel, being a US-owned business, can you give us a snapshot of how your colleagues over the pond view their election?
Oh, well, I'm not allowed to swear, am I?
You are. No, you absolutely are.
Well, yeah, I mean, it does feel like, I mean, Trump's got a worryingly high chance, but as it relates to housing policy, so our view, I think, as a shop, is that we're kind of not waiting for a government, be they Republican or Democratic, to provide us with policy solutions, but rather kind of drive forward ourselves with the business solutions. So this is going to sound like a pitch. It is a little bit, but we have a new business called Modern Living Solutions, which is really like the concept is kind of like the Ford Model T, where the idea is to kind of drive down the economic cost of housing through modular construction, lower sort of fewer frills operating models and stuff like that. But as it relates to the election, it feels like it's going to be a Trump victory, unfortunately. And so, again, it's just not dropping the ball, I think, is in the US as well, the last point to make, it seems to be more at the state and city level is where the real risks are with respect to regulation and so on.
Thank you. Honor, how do you look to the future in terms of a general election? And I looked at the bookies yesterday. Labour are definitely looking pretty likely at the minute, according to our bookmaker friends. How do you see it?
How my customer sees it is really interesting, because they are all Daily Mail readers, which is a source of great disappointment to me. But even they are now willing for a Labour government, and they want the change. what's really interesting with my customer, actually, they're slightly counter-cyclical. The more uncertainty there is in the market, the more they seek safe haven with us. So they move in droves when they feel this insecurity that we're feeling. But they are also benefited by your decisions. If you hold that at 5%, they have no mortgages and they have a ton of savings. You know, the longer you hold, the more money they're making. So this is a perfect environment for the oldies right now. They're happy.
Oh, I'm glad someone's happy.
Yeah.
That's good. Good for them. Rob, do you want to talk politics? Any questions from the room before I do? Dom, good to see you.
It's going to be a Labour government. Fact, I think we said now. There's going to be no money for them to play with. So, first 100 days, you're Angela Rayner. What are you going to do to feed out to the wider house building market, including housing associations, that can cheer them up that there's going to be some intervention to actually accelerate housing delivery? First 100 days.
I love the fact you're looking at me, but I'm sure that question was... Honor, do you want to tackle that one?
Oh, God. I just need them to get out of our way. I feel like between us, almost even on this stage, we could build 300,000 units a year if Angela Rayner would just get everything out of our way. That's how I'm experiencing house building at the moment, but I reckon you've probably got a more sensible answer.
I don't know. I'm just angry woman a lot at the minute.
Who's Angela?
Yeah, she just needs to pay capital gains tax or whatever it was she didn't pay. I do not buy the fact that this line from any of the political parties that there is no money for housing. We are spending as a country, just the London boroughs have spent, they spend 90 million a month on keeping people in hotels. We're spending £8 million a day keeping people. We have said, you are welcome in this country, we need to house you. We are spending all of that money. Now, you can't break into that overnight, but I do need any government to think over a couple of political terms. How could you change the balance? Now, I've got somebody in Dundee checking this fact for me, so there is a health warning on it, but in 1980, 90% of public subsidy into housing was into bricks and mortar. Now it is into housing benefit. And actually, when you track where that housing benefit is going, it is not benefiting this country fully. So just pull your finger out, stop thinking about one term of government, think about 2 to 3, and try and fix this properly over the longer term.
I think that's the kind of... not quite as angry as that.
Okay.
But
I'm a woman of a certain age. I do anger a lot.
I feel like that kind of reflects a global trend. So during the 1980s, we saw a shift globally away from kind of supply side measures, so building stuff, to demand side measures.
Yeah.
And it kind of just became, what's the word? It just kind of became like axiomatic, but it was never really proven. Now we kind of know that it doesn't work. Like if you look across Europe over the sort of whole post-war period, we're building record houses, and then as soon as we introduce this sort of shift from supply side to demand side, house building started falling. And the assumption was, and it was somewhat an idealistic assumption, that the market will just provide, but there was no respect to the fact that housing supply is somewhat inelastic, and it just simply hasn't worked.
No, absolutely. And we keep obsessing with stimulus to demand when actually supply is our problem. And, you know, it's a really, really, really tricky one. And for me, one of the things we need to fix, which is not brilliant for this audience, but you'll understand if we fix it, it does make it far better, is the social housing side. I mean, the average L&Q resident has an income of £14,000 a year. So you can do what you like with 1% deposits, mortgages and everything else. If you're a lender here, if you're a retail lender, you will not lend to somebody who's got an income of 14k. It just cannot happen. If we sort out the social housing problem at the bottom of the market, it frees up so much more. It frees up stock, it frees up resources. And actually it takes something like it just in London, we're spending an extra 2 billion a year in London in the NHS because of poor housing. So we've just got to fix this.
I think your point is key, though, around parties being in election, being in power. They're not looking at the next 20 years, because if you make one wrong move, the public turns against you, or your party turns against you, there's a vote of no confidence. And so they are just trying to win the next election, and therefore one step wrong they fall out of favour very, very quickly. And I think that that's the problem with the political system.
But why don't we regard housing as part of our national infrastructure and depoliticise it if we could? You know, it's too political, isn't it? You know, if you take social housing, depoliticise that, and just say we need a national house building programme. And, you know, I'm not, that sounds very, very Jeremy Corbyn, but if we fix this, the country will be so much better.
I'd vote
Can I
for
stand for
Fiona.
election?
For
Yeah.
sure, I'd vote for you.
It's
It's not too late. Thank you, Don. Great question. Anybody else want to ask a question? No? I'm going to dive in and ask this one. What emerging trends are you seeing in the property market currently, and how do you anticipate these trends will evolve in the near future? So what is happening right now that you've jumped on as leaders of your business to leverage, to drive, you know, performance, I suppose is the question.
I mean, I think there's a rental market crisis, I think, particularly in London. The rents have shot up between 25 and 40%, pushing people, normal people out of London. And I think that's a huge problem. I think it's particularly disappointing that in the recent budget that the government hasn't done more to support landlords. And I know landlords get a bad rep, but the reality is you need landlords to want to invest. And there are very few reasons why you would be a landlord right now. So, you know, your rents might have gone up 40%, but your mortgage rate's gone up 4 or 5 times, or, you know, in terms of the payment. So you're perhaps making a loss. And then the reality of that situation is you're jumping ship, perhaps, thinking, what's the point of being a landlord? If you want to buy into more property, you're paying an additional stamp duty charge. So we need landlords and we need supply of property. And if you don't support landlords, then the landlords will sell and there will be less stock available. So I think that is a really key issue. Particularly with the cities, and you're forcing normal people out, and, you know, that's great, you know, the wealth stays in the city, but that's not what anybody wants. We want to live in a diverse, diverse cities, and I think it's a real problem.
Yeah, absolutely. I'm really interested in the Greystar model on off-site manufacturing as well, to be able to drive down cost so that we can build as effectively as we can. And we've seen some huge failures like Sekisui, Ilke Homes. And it all goes back to that lack of certainty of pipeline, so that if we did have a national building programme, you could at least put some oomph into the R&D needed to be able to do what you're imagining with Greystar, and to do that at scale right across the country. That worries me. The second trend I'm really interested in, I think it's a consequence of what you were saying about rents, is shared ownership, of which we've been doing this for about 30 years. It's held up right through the current turmoil in the market because people are being pushed out of the private sector into shared ownership. But we do need to sort out leasehold in some way. And I think Michael Gove had a good go at it. I'm not sure he was correct in what he was trying to do, but we need to translate leasehold to the market, to purchases far more effectively.
Cool. So I would say for Greystar in Europe, it would be student housing is the number one pick at the moment, particularly UK student housing. So we've been quite bullish on the sector for a long time. It was quite interesting when we were talking about it during the pandemic, and it's somewhat of an I told you so moment, but we were being told by a lot of people that people thought that, well, there were 2 trends that people kind of anticipated. One was that everyone would leave the city and move to the countryside. The second one was that people would stop studying at university and they would do their degree online. Of course, neither of those things have happened. The tailwinds behind student housing in the UK in terms of demand are very strong in terms of demographic demand from Asia. So the 2 biggest groups coming into the UK are China and India. Those are sort of very large countries having a very big effect on a relatively small country in terms of its housing stock. In terms of the performance of student housing, it's somewhat counter-cyclical because of the demand factors. The supply is extraordinarily tight, and you're buying into all that growth at a higher yield than you would do for multifamily. So you're just going to get a higher return, and I would argue a higher risk-adjusted return. So we've believed that student housing just makes sense for a really long time. Still think that's the case. We think now that same kind of trend is going to make its way into the Eurozone. So when you look at the provision rate of student housing in the UK, which is still seeing high single-digit growth, maybe 8-9% growth at the moment, The ratio of beds to students, about 30%. In markets like Spain, where you have people coming from Latin America, the provision rate is about 5% or maybe even lower. So there's a lot of wood to chop there. That's the stuff that we're very focused on. The things we're not focused on so much at SFR, so I get a lot of questions about SFR. There's a great story behind it, but when you look at the pricing, you're buying into yields, like I think the latest CBRE yield sheet shows that you can buy into regional SFR at the same kind of yields as for inner London multifamily. And it just, for us, if you think about kind of growth and liquidity, it just makes no sense to do that at the moment. And in terms of like affordability, I do think that the way to address this is in terms of the construction sector. So one of the interesting facts about the construction sector, and there's this great McKinsey report on this, is that over the last 100 years, it's one of the few sectors that hasn't actually seen significant productivity growth. Because the way we build houses is pretty much the same as how it was 100 years ago. You would never buy a car from Mercedes-Benz if they made it on your driveway, and yet that's really how we make housing in this country and around the world. And there's lots of opportunity to improve that. I feel as though COVID and the sort of labour shortages thereafter, they're going to prove a catalyst because people are going to have to build more with less labour, and modular solutions are the obvious solution to that. I think that's going to be the future for affordable housing. We're trying that in Europe, but it's really about productivity growth in the construction sector that we have to drive.
We're, you know what you were just saying about the hideousness of renting in London, and we had that stat, didn't we, last year from Rightmove that said for every one property that goes on the market, there's 32 people looking at it, which is like, shame on us, everybody in this room, that we're presiding over that really shocking market. So we're trying a little stunt in Mill Hill. You and I have some co-located stuff up there. And we're trying to go under the radar of the planners, because if we ask for planning, their heads would explode. So we've just, we've bought a block off Barratt, and it's a C3 consent, and we're shoving in oldies and the students and some key workers. And the oldies are completely comfortable conceptually with the idea that they're subsidising the rent for the youngsters, because they see that they won the golden ticket and that they have just, their house price has just, you know, gone through the roof over the last 30 years. And it's a little mini experiment for me about whether we can collectively undo some of this damage that if you're a young renter now, you're fairly fucked, and use the income of the olds to subsidise. I actually think that I might get into some sort of trouble with a lack of competition. Like, am I discriminating against the olds because they're paying a higher price per square foot than the youngsters? But I thought I'd just deal with that if it comes up. But it's a really interesting experiment. And actually, will the olds live longer because they are co-locating with young people? I think they'll be really stimulated. So I'll probably know this time next year whether we've managed to make it work.
If they do live longer, that drives your returns
I
your
know.
year.
Exactly. Tenure.
No, but, just on this theme, because you're right, the oldies, as you call it, they've done pretty well out of the UK property market. And you must survey your customers. There's a hell of a lot of real estate locked up that underutilised.
Oh, and they know that. So there are like 300,000 people tonight who have nowhere to call home in the UK. And we've let, like you said, we've let them in and then we didn't give them a home. They're in temporary accommodation. About 3,000 of them are actually technically sleeping on the streets. But tonight, when we all go to bed, there are, in the homes of the over 65s, 9 million bedrooms with nobody in them. Like, it's such a shock. You'd like, if we, and the olds are not sitting in these houses because they're lazy. They're sitting in them because we actually haven't got enough. So if we all took a step to the left and lived in the right-sized accommodation for us, we don't need to build anything. We don't need to build on the green belt. We don't, you know, we can just stop and put everybody in the right, because we have 9 million spare bedrooms. The reason it won't happen overnight is, you know, the state gets in our way and we can't build fast enough. But 9 million bedrooms tonight, there will be nobody sleeping in them, and that is shocking.
It is. I agree. Who's going to give me a question, sir?
Hi. I'll try to put this through, but succinctly, but it's back on the supply and demand of housing delivery. We often obviously blame the lack of supply of housing, which I think is the standard kind of obvious response to the lack of housing in the UK. But is it not also a case that the demand is maybe not there? The cost of housing is so expensive in the UK. I think I read somewhere that after Finland, we're the second most expensive developed country in the world in terms of the cost of housing, however that was calculated. But in terms of the demand side, is it not a case that the cost of building affordable new homes is just actually so expensive that the demand is not there? They are unaffordable. So not only do we have a supply issue, but we've got this other end where the demand's maybe not actually there for these homes to be delivered.
I would disagree hugely on demand. Demand is absolutely endless at the minute. Where I go is your point. It's the productivity. We're still building homes as we did in Victorian times. It's stop-start in all sectors for various reasons, whether that's whether the market can absorb what you're building or whether I can fund it because I'm paying 450 million to sort out cladding on some tower blocks. And we all go in fits and starts. And that then undermines our ability to be more productive, surely, because we can't, you know, you go to one of the major volumetric factories, for example, they rely on a pipeline that is certain, and none of us can give it because, you know, some years I'll build 4,000, next year I might only build 1,000, and nobody can tell you, and I can't even predict whether I can keep building at that rate. I aspire to it, but there are loads of factors, and a lot of them are government linked. Planning, for example, I mean, I think the planning system is perfectly adequate. I think the resourcing of it is a disaster. And we know everybody in this room will have horror stories. It took me 5 years to get planning permission for a tower in a South East London borough, Labour South East London borough, which is 70% affordable, this tower, and 5 years. The person who led the complaints against it is likely to be our housing minister in a new government. So, yeah, go figure. Anyway, now I've got to stop being angry.
I'm terrified.
Plague on all their houses.
Wow.
I think, like, maybe if I understand the question correctly, there's no shortage of fundamental demand, so there are people that need more homes for sure. But as it relates to, like, economic demand, you can actually see this in Paris. So in central Paris, there's slight demographic decline. So the population of Paris is shrinking, not because there's fewer jobs there or because there's actually people don't want to live there, but just because people can't afford to live there or they can't find the space. And what you're actually seeing is those people are migrating out to the west of Paris into the suburbs. So to that extent, demand and arguably labour force mobility is being squeezed because people just can't find the accommodation they need to in order to get new jobs. And there's more, I think, research on this in the US, where it just, as I say, in the US you have more data, you can see it affects labour force mobility. So for me, like, I'm going to go on a bit of a tangent here, but I feel as though in the UK, the kind of golden triangle between Oxford, Cambridge and London has a ton of potential to be Europe's next Silicon Valley, and by rights it should have been a long time ago. The issue is housing. You can't build enough housing in these areas. And so therefore, because you can't build the housing, you can't bring the people that are going to add value to the economy. If you can't do that, you can't grow the economy. And it's just this kind of, whatever the opposite of a vicious cycle, sorry, yeah. So it really stymies growth to that extent as well, I think.
I think the demand is definitely there, but it's about the affordability. So shared ownership has become much more popular than it ever was, in my view. I think the stigma attached to it has gone, and I think particularly some of the shared ownership in key parts of London, if it's an opportunity to live in London and commute in, I think every shared ownership scheme we ever have, they tend to fly out the door. I think that's the issue. There's not the supply, and in terms of mortgages and starting, first-time buyers, the help that is required there. There are a lot of people that can pay their mortgages, but they can't save for the deposit. So if we can do more on those sort of reduced deposit mortgages, I think I read this morning that Yorkshire Bank are looking at one with a 1% deposit up to 500,000, but no new builds and no flats. So I'm not sure that's designed for London, but those sorts of products are, I think, what does need to be seen more of, so people have an opportunity to get onto the ladder.
I mean, I would have said that's more a question for the economists.
I was just going to say, I'm trying to get a mortgage at the moment, and every bank tells me I can't afford one, which they're probably right. But it's ever since the GFC. We've been asked to give our inside leg measurement and you know, how many takeaways do you have a week, and those types of questions.
I mean, I would echo, this year has been phenomenal. We have been out the blocks at an unbelievable pace. So in terms of the transactions agreed, we're looking at numbers back to sort of 2010 in terms of offers, viewings. It's unexpected, and it's across the country. We've agreed 100% more deals than we did in the same period last year. I think the 5% figure, which is a figure I hear a lot of, is a national view. In London, it has been 10 to 15%, and I think that's been really challenging, particularly for flat owners, because you know, the mortgage rates. Battersea is an area, for example, you know, relatively high earners, highly leveraged. Mortgage rates go up. They might rent these properties out. Suddenly, the supply is vast. Properties are coming onto the market, and you're not going to sell unless you're really competitive on price, and that's not what people really want to hear. But houses and best-in-class property is just flying out, and I think there is confidence. We've had a year of what we call choppy, not challenging, choppy market conditions, and returning to more of a normal marketplace. But the market has been brilliant this year, and as long as you've got sensible clients, the buyers have that confidence, and I think that it's looking ahead, people knowing that interest rates will come down, whereas you compare ourselves to last year, interest rates were going to go up. So we hadn't reached the worst moment of it. So I think that where people have the confidence, they're starting to invest, and interest rates may come down, but I think this is accepted as the new norm. And for those more experienced buyers, you know, rates of 4 or 5%, you know, they're not as bad as they have been 20 years ago. So for the more experienced buyer, I know when I bought my first property, it was 6%. So anything less than that, you know, I think I'm winning. But we've had this brilliant time of 1.5% mortgage rates, and there is still an education piece that needs to happen, because younger buyers, you know, you sort of say, well, when will the rates return? I mean, I'm no economist, but I don't think they will for a long time. So you have to adapt to the new norm. But the sales market is incredibly strong, which is why for us we've seen, I think, 50% more property come to the market. We've been starved of property really over the last few years following the pandemic. And that's something we've seen both in the UK and with our international businesses, that our partners overseas, who've always wanted our clients as buyers, they want property to sell. So it is a global problem. But the market's good. I just hope the election doesn't kill it.
I think I'd share that although I'm angry, I woke up on the 1st of January feeling very optimistic, and the year has maintained that optimism for me. And the other thing we do at L&Q, we own Gallagher Estates in the Midlands, so we sell land for housing. And we've seen a real uptick in interest in land purchases. And always, for me, that's a sign that people are ready to build. So that's been brilliant this year as well. So yeah, angry but optimistic. What more do you need?
Great combo. Nigel, I'm just really interested, as a global player, where does London rank in terms of, you can place your money anywhere?
Oh, in terms of returns? Or in terms of...
attraction, I suppose.
Yeah, it's got some real, I mean, some of this is just psychological, but it's got some real cachet with global investors. So I've been doing commercial real estate and residential real estate for about 20 years, and it was the same for the office market. It doesn't really matter so much about it does matter about the economy and fundamentals and stuff like that, but I think there is just, London has this status as a global city that keeps it liquid, and it becomes a kind of self-fulfilling prophecy. It becomes liquid because it's liquid. And so people are just willing to pay lower yields in London. So we saw, I think it was like around Christmas time, the first multi-family deal trade at probably a sub 4% cap rate, which I never thought we'd see that for a while. But yeah, London ranks very highly in terms of liquidity. And also, like global investors, they're much more sanguine on Brexit, or they were. It was something that people obviously were very concerned with over here. But if you speak to investors in Asia, the Middle East, even the United States, they've got faith in London as a kind of long-term growth play. Yeah.
That's good to hear. Any questions, sir?
Something that's not been touched upon is, putting aside the horrendous politics that we're currently experiencing in planning, is viability. And so land values, certainly taking London, which is where my company develops, land values will only come down to a certain level because landowners, yes, they could be patient, but equally you've got other competing uses or existing uses that are more valuable. And at the moment where we've had huge cost inflation and a little bit of value coming off, with the amount of affordable housing, and Fiona, I'm not suggesting we build less, all of those pressures on the development process means that you're unable to have a viable project. And so the only way that it seems this can be fixed is by government intervention, whether it's more grant. And I can't speak for every developer in the room, but I think we'd all be delighted to provide 50% affordable housing if there was sufficient grant. So I don't know what your view on that is, Fiona.
Yeah, and obviously I'm gamekeeper turned poacher, because for 10 years I ran planning and various other things at City Hall. And I completely agree with you. I would have debates with various politicians about you can set it at 50%, but 50% of nothing is still nothing. And you could grind this to a halt. I think it got to a peak where you were being pushed to provide affordable housing, a contribution to the local authority for their Section 106, some public bloody art, which I have a real aversion to. TfL, Transport for London, always needed, and you bus garage and you whatever. And when you added all of that on, viability, it was gone, absolutely gone. And at grant rates of 28k per home on some occasions, that doesn't take it out at all. So I think the public sector needs to get its act together about a single conversation about what is it they ask. We had a brilliant scheme going at Elephant and Castle for anyone who built there, where the tube station was going to become, we're going to have to close it every morning basically because of the volumes coming from the new developments. But we had a fantastic thing going with Southwark and City Hall where you had a development pot and then you just paid a fixed sum into it, and for that area you then allocated it to the greatest need, which meant there was far less affordable housing built in that area, which was okay because you then had a transport network and you got rid of the roundabouts and everything else, much more attractive place. But yeah, the public sector has always got to have a dose of realism about what it can take. Now that said, there are lots of us in the room who push the envelope on what we're trying to do. But yet, realism on it. We can't keep loading public sector asks and then keep expecting us to keep building.
Honor, does that affect? It must affect your business.
Yeah, it's hideous. I've got one at the moment in Hounslow where there probably isn't any viability, but the late stage review is enough of a burden that I can't actually transact on that piece of land. So I've got to go in tomorrow and say, either you remove the late stage review or I have to trade on, which is heartbreaking because there's 50 units there that I could have been building for the last 2 years, but I'm still stuck. So yeah, I'm really, really stuck with this. It's a challenge.
No answers.
No.
Okay.
So for viability, that's the single biggest factor.
Yeah.
Historically, if you look at building booms and busts, people can tinker around the edges with policy, not to say these things aren't big issues, but ultimately it comes down to the cost of capital. If the cost of capital is cheap enough and there's land, stuff will get built. If the cost of capital is high, cost of debt is coming down, but the cost of equity is still very, very high at the moment. And until that gets resolved, I think that's going to be the biggest factor as it relates to construction for all sectors in the UK.
Yeah, because I think I said to somebody in government, they said, what would make you get back to building the same rate that you have been? And it would have to go back to when I started as a trainee development officer for a housing association way back. You'd have to pay me 100% of the capital cost plus 10% to run it. And they didn't go, no, never, because they realised that there's going to have to be something really dramatic happen, because the cost of capital, I mean, Liz Truss cost us 200 million a year in the cost of capital. Yeah, so love her. You were triggering me there when you mentioned twitching. Oh.
Ladies and gentlemen, we're out of time. I know that the panel have very busy days ahead of them. I'm sure you absolutely have very busy days ahead of you. So I'm going to have to wrap it up. What I do want to say, most importantly, is thank you to these guys for giving us their time. I really, really appreciate it. And equally, thank you to you for coming along and listening and contributing. It's really overwhelming just to see such a packed house. So I wish you a great day, great week, great new financial year for many of you, and thank you once again.